Hi everyone, I'm Aiden Durham with 180 Law Co. in Colorado, and welcome back to All Up in Your Business. Today's episode, we're going to talk about something that's very highly requested by you guys. I've had a lot of questions about this, and for very good reason. We're talking about the Tax Cuts and Jobs Act, or as it may more commonly be known, tax reform, the new tax bill, all the tax changes that have come along this new year thanks to one Mr. President Donald Trump. There was a lot of misinformation and frankly just wrong information floating around in the media and on the internet, and people started getting really freaked out about what all these changes were going to mean. I read one article a long time ago that said no more business deductions. We're just losing all the deductions. That's not true. We're going to talk about some of these changes that came with the new tax bill and how they might affect you as a small business owner. The first change is with the corporate tax rate. The new tax bill gives a just flat corporate tax rate of 21%. Previously, there was a structured tiered tax rate that went up to 35%. So depending on the corporation's income, it would pay up to a tax rate of 35%. Now it's just a flat 21% across the board. Now remember, this only applies to C corporations. C corporations, not S corporations, not LLCs, unless you're an LLC that's taxed as a C corporation, but you have to be taxed as a C corporation for this to apply. The next thing is that all the other ones, LLCs, S corporations, and pass-through entities, now get a 20% tax deduction. So this applies to pass-through entities, which are LLCs, S corps, sole proprietorships, anything where the tax passes through the entity and is taxed at the individual level versus a corporate tax where the corporation pays its own tax. So this 20% deduction allows pass-through entities to deduct up to 20% of qualified business income. Qualified business income is essentially like the net income of the business, so your profits minus your losses. That's definitely not the exact calculation. There's a lot more that goes into it, but you know, kind of like your net income. So for many businesses, you'll be able to just take a 20% deduction of your qualified business income. Now, this doesn't apply to everybody. Certain service-based businesses, certain professional businesses like attorneys, accountants, consultants, anything where the biggest asset is the person's brain and their knowledge. Most of those businesses aren't going to reap the full benefit of this tax deduction. And it's also going to depend on the taxable income of the individual. For many service-based businesses, once you reach a certain threshold in your income, that deduction is going to start reducing below 20%, or it's just going to go away altogether. And then for even non-service-based businesses, there is going to be a limit where you don't get the 20%. So if you're making millions of dollars, you don't get to deduct 20% of it. It's going to be capped, and it's going to be kind of a tiered thing. But the idea is that there's this 20% deduction that applies to pass-through entities. And finally, the other change that's going to have the biggest effect on many of us has to do with meals and entertainment. So previously, we could deduct meals and entertainment expenses. So if you took a client out to dinner, or you bought bottles of wine as thank you gifts for clients, or you go out to sporting events to try to attract clients, things like that. Those things used to be deductible. They're not going to be deductible anymore. Same with like subscriptions and dues for memberships in organizations. Those things are no longer deductible. What you still get is the 50% deduction on business meals. So if you are traveling and you have a business meal while you're traveling, that is still 50% deductible, same as it was before. So you're not losing every meal deduction, just those in that meals and entertainment category. So these certainly are not all of the changes that are coming from the tax reform. These are the most applicable ones to this situation, to All Up in Your Business, and to all of my small business friends out there. If you're concerned about how this is going to affect you, if you have questions about it, it's a good idea to talk to a CPA or accountant about it. If you're not sure what you can be deducting or what you can't, definitely talk to a tax expert about it. Thank you all for watching. I'm Aiden Durham, and I'll see you next time.